that Foreign Affairs article, Michael Levy and I from the Council on Foreign Relations just wrote another update, and we explained the answer to Jason's question, which we talked about earlier. The recent period of low oil price volatility, I think, was due to a confluence of factors which together amount to dumb luck. The first one was pedal to the metal Saudi production. If you think about the last period of low volatility in the early 80s, when it was Saudi cutting. So the Saudis were maximum, at their highest production we've ever seen, if not their maximum capacity. The second was the surprise in U.S. shale oil production. So we had a lot of supply growth coming. The third factor would be slow GDP growth, and that's the IMF forecast right there. Now, the IMF continually expects we're going to get to a 4% rate, and they've been disappointed and been downgrading their GDP growth forecast. So we've had tepid GDP growth. I think it's interesting that you have tepid GDP growth and therefore lackluster oil demand. Herculean positive supply side news, again with the U.S. offsetting disruptions, and yet still oil prices were barely tethered to 115. I think had you relaxed, if you had fast growth, or you didn't have the U.S. boom, or the Saudis didn't go all the way up, we would have, I think, seen higher prices. Another factor was the destocking we saw in the OECD until recently, and that has changed this summer. And that's that large chart. And then finally, as Michael and I pointed out, volatility for all financial assets has been suppressed by unprecedented, unconventional monetary policies, creation of money. So we have had this spell, and we could go back there again. I'm not going to say that the rest of the next 20 years are going to be from $30 to $200. If we continue to have tepid GDP growth, Herculean Saudi production, 1 million plus barrels a day from the U.S., and we destock, yeah, oil prices may be precariously balanced. I'm not going to suggest we'll never see that again. But I think that's an unusual combination of each factor which is a requirement that is unlikely to sustain. And what I think the reason for this recent increase in volatility and collapse in price was, again, principally due to OPEC kind of saying, we're not going to be the swingers anymore. And that was a main factor in our 2011 article. So again, if the world grows really strongly, prices aren't going to be stable. If the world grows really weakly, prices aren't going to be stable. If we kind of bumble along and we continue to have good luck, yeah, they'll be stable. And I just wouldn't bet on that going forward, though.